In.
Hi guys, welcome to the Tom O'Brien Show. I'm John Logan, filling in for Tom. They let me back in the studio. Let's have a good time here. Sorry for the technical difficulties there. Here we're back, I hope. And I'm John Logan again, filling in for Tom O'Brien today. They let me back in the studio. They almost cut me off again, but I'm back. Let's jump right into the S&Ps. I know everybody's interested in that. We had a kind of an FOMC situation today. And, you know, I didn't even really listen too much to what they were saying. I mean, I don't know if there's anything else really that could have been said that hadn't been said already or assumed already. So one of the things that I look at, and we talked about this actually last week, defending this 2404 area on our unfair highs on our weekly profiles. What does that mean for guys who don't follow some of the things that I've talked about on the show that I used to do on TFNN? In the mornings, 2404.50 unfair highs on our weekly. That means that we're at the top of our balanced area, top of our profile, and that inflection point or that extension of range, that's kind of the line in the sand, is something that was defended pretty seriously last week. And you want to see, and we're going to talk about gold in this same light in just a little bit and how that didn't happen with gold. So when you come into these inflection points, you want to see prices get away from these particular lines in the stands. So as we have bounced and kind of got away from that on Friday, you could expect some follow through with some backing and filling here. We had our FOMC minutes come out. Here's our daily. And, this morning we got into that 2421 neighborhood, which is kind of that higher barrier after we had defended the 2404 on Friday. And it looks like we've got some clear sailing here now. After the minutes, had a little bit of a ricochet action. But, if you forced me to put a trade on with the S&Ps right now, I'd still have to trade this from the long side, believe it or not. So as we look at that, we want to take a look at the 30-year. In reference to what's going on here. We had talked actually about, the bonds kind of doing their back into the balanced area move down south. Obviously, rates are an inverse reaction to that movement in the bonds on the north side. But we've had a really thin profile appear on the 30-year now, and that's a little bit more of a support possibly on the way down. So I'm not looking at buying this inflection point here at around 153.01. But being able to kind of like use that as a little bit of a target here, maybe we can get a little bit higher fill for some backing and filling on the way down again on the 30-year. The 10-year, I don't see a lot of hope for this one. I mean, this is kind of more the shorter term situation on the yield curve. I feel like, balance in a monetary equation, this one's going to have a lot more negativity than it is on the 30-year. Taking a look at gold as we glide through some of these instruments here. Now, the reason I'm pulling up gold right after the S&Ps, and you want to see gold. Last Friday, I did the show for Tom last Friday. We talked about you don't want to see this type of action getting right back down into the precipice of where we started with the bounce on gold, and then obviously this week we've just completely thrown up, and 1241 was that line in the sand on gold, and we breached that. And it's kind of okay to be short, not okay to be long right now on gold. So going into crude, just to cover the bases here, I didn't really feel like crude was going to do these super extensions from 42, we got up into 47.50, but you got to be willing to look at this stepping back again at the long-term picture in crude. And I'm showing a weekly chart right now. And because we were trading below profiles on our weekly, and just, a lot of times these particular instruments want to explore the whole profile when a new profile appears. You want to really kind of almost bank that we're going to go from one side of the profile to the other. So that means, for guys who are not watching my charts right now, that a lot of times we're going to explore the entire fair auction. And the top of the fair auction on the weekly is 47.13. So we reached a high of 47.32. That's 20 cents off the highs, and then we came in over $2 today, I believe. So waiting patiently until the market comes to you on these longer term trades is an important thing to do for starters, but it's also a smart thing to do. So as this particular product has come off of that inflection point in a pretty big way, you're right down into the middle of the profile, the POC, if you will, and you got to be willing to really take some off here and just kind of sit back and wait and see what happens at that point. If you're not happy with a 5% move in crude in one day in your favor off of that type of inflection point, I don't know what you actually could be happy with. So again, we've reached some targets. We've had a good chance to put a trade on, play some defense, more importantly, and I like how this thing acted. Going back to crude for just a second here, I had tried this trade from the short side at 45.29 on the way up, as it was backing and filling on the way up, because of another inflection point I was looking at on the daily time frame. But the theme of trading always is, in my book, lose a little, lose a little, lose a little, make a lot. You want to just understand that picking these inflection points and picking the battles around these inflection points allows you to play defense relatively well. And you're always trying to increase the risk rewards, like we talked about Friday and probably every other day that I've spoken. So when you're playing defense and you get clipped a little bit, that's part of the game. Eventually, you're going to get these moves in your favor, like today, and that makes up and then some for all those little lose-a-littles. So you guys hang in there. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.